Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we give our introduction back to due diligence.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in raw.
Featuring Dan, Deity of Dips,
And Hugh, honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. We're recording on Thursday morning right now, so less this week in the market this week, more what we're going to be kind of bringing back. We know you guys used to love Hugh's DD, and we're going to need y'all to shoot some suggestions, and we'll get back to them. And you know, and all the DD you kind of find on it, you kind of give us an outline, so it'll make it a little easier, and we'll kind of dive in and see which ones are good on a weekly basis. But first, we kind of need to go back into due diligence a little bit, say how we're going to be finding this stuff, what we're looking for, et cetera, et cetera. And I know, like, we always talk about like cash on hand and everything, but not really like where are we looking for it. And the more information we can kind of get about it, the merrier, especially in this lack of DD world. I'm sure you hate it. When people just see a stock, they look at the float and say, hell fucking yeah. You don't see people looking at earnings reports anymore. You know, I know you can't stand it. So I guess like
I can't stand it.
In the perfect world, explain how you would want everyone kind of like looking for their stock.
Yeah. So first off, I think you and I are both really excited to bring back like this kind of what is it, section or segment, because we really used to enjoy these, and I know that you guys used to enjoy them. So I think this is going to be a really good segment to bring back, and something that we can really keep as like a key piece of the pod.
and not just doing ones on like stocks we like, but also just like picking random ones and knowing like why this DD didn't work out. Like if you find one and you're like, oh, this actually isn't as good as I thought, we can kind of go through what you saw that made you look at it in the first place, and then kind of transition into why you didn't like it. You know, the catalyst is too far out. The last year's phase 3 data was dog shit.
Yeah. No, so a few things that really goes into this is that, one, you got to remember that all of this is in our experience. So take that with what it is that, you know, we're going to keep this pretty systematic and talk about the same things. You know, of course there's outliers, but the thing that inside my career that's kept me the most consistent is being consistent. And that means like looking for the same things. You know, when you're comparing apples to oranges, it truly does mess with you. You know, we talk about all the time that the hardest thing for newbies and the hardest thing for rookie traders is getting caught up inside that Kool-Aid, you know, and getting caught up inside that like a mentality of like the CEO would never turn me wrong. You know, there's no bad companies out there, you know, like every company is out there for their shareholders. And in reality, that's just not true. So for the most part, we're going to keep this as consistent as possible. We talk about my matrix a lot, and that's what we're going to keep to most of this. The biggest thing that I like about swings is that most of the time I'm always swinging for a catalyst. So when people ask me what my job is And I feel like talking about it and not saying something like a dentist or an astronaut or something along those lines. I will say I am a catalyst swing trader. Okay, so when we break that down, it means that, if we take it catalyst, okay, a catalyst is something that is going to change the company. I like to use the word fundamentally change the company. Although that's not necessarily true all the time for swings. Sometimes you're not necessarily swinging something for the phase 3 data, but that's still a catalyst. Okay, so that's something that can materially move the company. And then swing trader, I'm swinging, I'm a trader that swings, because when you think about a trader, someone who's in and out of positions, I'm just someone who likes to swing them. I like when I don't know if I'm going to wake up to my portfolio being up 10% or down 20%. We talked about last podcast. We like that pain, So, go ahead. I know you.
No. If you like that pain, I don't think we all do. But no, I mean, back to catalyst though.
Yeah. So that's like the true heart of where I've been able to become successful over my career. I always think it's good to have multiple strategies, but I think it's really good to have one that you're really good at and one that like the back of your hand. So when we do this segment, when we do things like that, I'm always looking for a catalyst. Now, I love the Atlas Flora. I love Bear, because Bear has that sheet of like catalysts that he believes move stocks better and bring more volume than other stocks. So, for instance, like a purchase order that is going to up revenue by 1% is probably not going to be a great catalyst, because it's fundamentally not going to really move the company that much, because it's only upping the revenue by 1%. Therefore, if we're thinking about this on a fundamental standpoint, the stock should really only go up 1%. Okay, it's similar to if Apple has an increased earnings report of 5%, the stock usually probably won't move more than 5%, because that's what fundamentally, if it's fundamentally priced correctly, that's what it should move up to. Okay, because remember, is that although the market is not equilibrium and it's not a zero-sum game, it should be like in theory.
It's one of those things. It's like, is it there's just so many moving parts. You're like, I don't want to say it's a zero-sum game.
Yeah, exactly. But in theory, if something is correctly priced and they up their revenue by 10%, the stock should only move up 10%. That's a really easy concept. But when I say that to most people, they're like, oh, okay, that makes sense. So something that, so I usually look for something that is going to fundamentally move the company at least 20%. And why I say 20% is that if it's fundamentally moving the company 20%, that usually means that more algorithms and tons of volume will come in, because that's a significant change inside the company. There's going to be people that are going to want to hold that now for longer periods of time than just traders. So I usually look for, like I said, things with a 20% that can move the company 20%. So we're going to look for a catalyst. We're going to look for a good catalyst. I typically don't. Most of us, if you listen to the pod for a little bit, we like the small caps. We love the small caps, but we don't like the small cap bios. And I shouldn't say it. We love the small cap bios for run-ups, but we rarely ever hold.
Yeah, you can't be sitting through a small cap phase 3 data. I mean, there's some potential there, but man, does it usually go terrible.
Yeah, there's truly only like one or two inside the past 2 or 3 years that I've held through. And I mean, even then, they're so easy to manipulate. So if someone finds out that it is good data and they have a big enough of a book, I mean, there was one TRVN. The OGs will remember this one. This was like 2 August ago or something. And the day before the PDUFA, it tanked like 30%. And basically it was just being heavily manipulated. And someone just came up and scooped up all the shorts. And then like the next day it went 300%. And, I got so many texts and DMs and stuff like, dude, like I got shaken out because I thought someone knew something early. So just rule of thumb, we typically stay away from bios. My rule of thumb is usually I'll take something 6 weeks in advance before the catalyst. and then I'll usually dump it like a week before, something like that. And that just gives really good risk to reward, that nothing's going to come out and surprise you. That nothing's going to come out and surprise you. So, like I said, we mostly stay away from bios. I really enjoy, because although companies are cheerleaders, we can use that as like a, what am I trying to say? Like a ballpoint, like a ballpark, to kind of use that information. And we don't have to necessarily drink the Kool-Aid, but we can sit there and say, okay, if this company truly believes that they can have triple the amount of clients that they have now, let's see if we can find our own research to support that. So every time that I'm looking into a company, I'll look at the investor deck. The investor deck is your friend. The investor deck is like when you're playing poker and the guy sitting across from you drinks a little too much, and he kind of moves his hand, a little bit, and he acts a little more drunk than he is. You're not sure if he's as drunk as he's acting. But if he is, then he's basically showing you his cards,
Screen peeking a little bit.
Yeah, exactly. That's the way that I look at the investor deck. Is that, listen, they're showing us their cards, but now can I go back and can I find that same research another way? So for instance, and this is like, I just want to start getting like the brain working a little bit, because that's what this is all about. Like at the end of the day, like we're going to do these segments, but I still, I want you guys to be able to do it on your own and be able to do this kind of stuff, without the pod, because that's the ultimate goal, right? Of everything, is to be able to fish for yourself. So if someone says something like, let's just say there's a rumor out there that Amazon wants to buy a company or something. I'm then going to go back through and see if I can connect Amazon in a different way to the company, whether it be through LinkedIn. I'm not talking like the company just likes Amazon.
And you can take it back to the UAVS thing. I mean, and we joke about it all the time whenever it's like Amazon's going to buy out UAVS, but man, did all of Intuit almost like at least part of them was like, this is going to happen. And it immediately tanked after after they had a web conference where they all thought it was going to announce it. But I mean, you saw they had this new place in Wichita, Kansas, and then Amazon also had like a place in Wichita, Kansas, and they were also Amazon was hiring a new drone delivery service, and it was just like, duh,
Yeah, no. I mean, to your point. So there was things where the UAVS had gone for like less than 4-pound payloads, which was, like that means that they couldn't be FedEx or UPS. You know what I mean? But
and then
why would
someone
they go for
made like a
payloads?
fake account of the boss's daughter on YouTube and posted a video of like Amazon. It was crazy.
Yeah. And I mean, to your point, it was like, and it wasn't like there was just an Amazon warehouse in Wichita. It was an Amazon drone site, like 1.5 miles away. Like, all right, come on. So, it's just really interesting. And then we were like connecting pictures of different Amazon leaked video. I mean,
we like people were analyzing a box in an Amazon video and a box. Like it was honestly,
I had so much fun doing that DD because it felt like there was like 20,000 strangers on the internet, just like
whenever
detective.
A murder, like when the whole Brian Landry thing was on the loose, it's like, and all the Twitter detectives are on it. It's the same vibe.
Exactly. That's truly how it felt. Oh man, that was the best, because even though it was like, we had smaller followings, like maybe 20, 30,000 people, it was like everybody knew each other. Even though it was like only 20,000. I mean, that was so much fun. But anyway, my point is that we're always looking for good catalysts, good stories, really good stories. And what I mean by good stories, stuff that sounds good. So, it doesn't really sound good if a company is like, hey, we have a new label coming out, will that fundamentally move the company? Probably not really. But if a company comes out with something like, hey, we have this new product, and it's patent pending, like that sounds good, even if you don't know, even if they might not even get the patent, like patent pending, people like to hear that. It's kind of like being in before the crowd. So the catalyst is really important. So that's kind of from like the catalyst, but then the other thing is the timing. I love catalyst with timing. because it gives me an end date. It gives me an end date. One of the things that I always hear from people is that like, hey, Hugh, I have, maybe a $10,000 account and I want to be a swing trader. I'm a college student. This is one of like the questions I get probably asked like probably 15 times a month is that, Hugh, I'm a college student, like I really relate to your story. How can I take, I have a $15,000 account, but I can't swing something for 20, 30% gains for 6 months. You're like, how do I fix that? So one of the things that I always loved about swing trading with a catalyst that had a timetable was that I had that end date. So if I could sit there and be like, okay, this is 6 weeks out, I'm gonna make 30, I can potentially make 30% on my account. If this goes well enough, that's pretty good. But if it's like, hey, I'm gonna make 30% in 6 months, there's probably somewhere else that I can use that money. So that's why I'll always keep kind of like a running ticket of stuff that's upcoming so that, if one of the swings does fly, that just fly up, then I know that I can move some of that money out and then, put it somewhere else.
Yeah. And with that, you can also wait for the ones that have the upcoming catalyst to have like a bigger dip, or maybe they have some news that doesn't exactly fundamentally affect the catalyst, but fundamentally affects the price a lot. So it's like, hey, this offering, the catalyst is still coming up, but people hated that offering, Yeah.
Yeah, no, exactly. That's a really good point. So that's why I love timed catalysts. Like that's where like my bread and butter is. Like that makes the most sense to me. But the other thing with the timed catalyst is that that's where and one of the things that we like to talk about is that if everybody if technical trading was the end all be all, everyone that was a technical trader would be a billionaire.
Yeah.
If
sometimes it fails that VWAP,
Yeah, exactly. Sometimes it fails a VWAP. Or if fundamental analysis was the way to go, everybody that did fundamental analysis would be a billionaire. And obviously Warren Buffett, he kind of proved that wrong, proved that right. But still, there's only one Warren Buffett. Like it's not like Jon Snow from
Game of Thrones.
I was about to say my hometown. What? No, I was gonna say like from Hoboken, New Jersey, can just take 20,000 and start doing fundamental analysis.
Yeah, but he can become the Watcher of the North. Spoiler alerts for anyone that hasn't finished Game of Thrones.
But so yeah. So my point is that I always thought that if we could combine those two, and that's where the matrix comes from, then we could really create like a really good strategy. So the catalyst with the timing and everything, that's where that comes from, is that's where like I feel like the bread and butter is made. And then that's where you add in the fundamental side of it. Because one of the issues with a timed catalyst is the fact that slick companies, and what I mean by slick companies, I mean companies that are not out for shareholders, that are literally just out to line their pockets. They'll know that people are all excited for, let's just say today's December 9th. December 9th's, I was going to say podcast, December 9th's presentation. And then if they don't have any cash, they'll know that the stock will run into that and then they'll drop an offering. So that's where the fundamental analysis part comes in, because you got to watch your blind side. And part of your blind side is knowing if this company is out, if one of these companies is out to, I don't want to say get you, but is out to line their pockets and is out for shareholders.
Looking out more for themselves than you.
Yeah, exactly. Yeah. So that's where that part comes into it, So we took like, the catalyst part, like I'll call it like the rocket fuel. And then it's like, hey, like what's watching our backside? And that's where the fundamental can come in. You can say, what is my real risk here? Maybe they're not going to announce what I think they want to announce. Okay, fine. So you take some off before the catalyst, if they drop an offering. That's where that fundamental analysis comes in, because at the end of the day, most of this is about, instead of including variables, it's about taking variables out. Like that's one of the reasons that we don't really love options, because options add that extra variable to it. We want to take that variable away. We want to make this as simple as possible. And that's where that fundamental, in my opinion, fundamental analysis is key. So going further into that, we got to know how much cash they have, especially we love our small caps.
Well, before we go into earnings real quick, just could you kind of go over your best places to kind of find these catalysts? How do you know, and besides just like biotech phase 1 data, because, you know, Benzinga has some good references for stuff like that. But like, you know, how do you know like what's coming up aside from just like waiting for the news to come?
Honestly, I just had a genius idea. Why don't we just make like a Catalyst website?
That's what I was hoping. Yeah, I mean, well, then who's going to run that?
I mean, we could. I mean, Christian doesn't do anything. He could do it.
God, Christian would hate us. He's already working on 2 websites right now.
Working on 2 websites, like a calendar. Yeah.
But I mean, like, where exactly are you finding your catalyst?
Yeah, so the thing is that there's really no website out there, and honestly, it's kind of genius now that I think about it. But there's really no website out there. I mean, listen, of course you have your forums, you know, that like you have your Discords, you have your Wall Street Bets, you know, like you have those other forums where people post DD and stuff. But there's no like I mean, obviously all those forums are biased, you know, like I'm not gonna go on Wall Street Bets and be like AMC going to the moon because of this, you know, like unless I have a position. So there's really no websites out there that are just
bios are the only ones where you can just locate their catalyst and dates coming up soon.
Yes.
So
yeah, exactly.
So other times you just have to wait for, you know, be picking apart like the right thing and just be like, oh wow, this UAVS Amazon thing. But that just example always comes into play just because it was so relevant at the time. But you just really have to wait until you find 2 things that cross over and just be like, holy shit, this could be it.
So this is the thing is that and I know I'm gonna get like a few scolds, is that this is the part that takes a little bit of time, because what ends up happening, and you know, we all see the news come out every day. Like there's thousands of articles of news that comes out every day. For different companies, you know, different 8Ks, different 10Ks, especially as we get into earnings and stuff like that. So when a company releases a press release, there's usually forward looking in there. So that means that, hey, like, especially like we're getting towards the end of the year. So it'll be like a lot, you know, again, this is where the investor deck is your friend. Okay. So if a company says out like, hey, we have a lot of exciting things coming out in 2022. We're excited to release new SKUs. We're excited to you know, open up this new plant. We're excited to get this insurance check, stuff like that. You know, that's where it's like, oh shit. Like, okay.
We have a lot of goats coming on board.
I fucking can't. Did you see that fucking thing where that thing's trading at now?
Nah.
Like 0.00001 or something. Like it's about to go negative.
Damn, my cousin swore it's gonna be $1 by the end of the year. Someone said that.
So the biggest thing is that you have to kind of keep like when you're scanning through news and stuff, kind of just keep an eye out for ones that
those
like
upcoming
dates pique your interest. Yeah, those upcoming dates. Because if it's one where, you know, like, I mean, I'm thinking of like a few bios off the top of my head who they didn't have anything in 2021, but in 2022, they're supposed to have like 3 phase 2s.
Oh, for our FinTwit calendar, we'll just add all the catalyst dates. Christian.
Oh, that would be good. Yeah, Christian. Yeah.
So, okay, well, now that we got
he's doing finals too. Shout out to him.
Oh boy.
But to your point, yeah. So that's where, you know, you got to use investor deck as your friend. So there's 2 ways to do that. Like I said, one is just scanning news. The other thing is that former runners. So if I see a stock that gaps 300 to 400% in a day, I usually keep that. I just kind of write that down and I'll look into what that company is doing. You know, like, does that make sense? Like, because if it just went 300%, it can do 300% again. You know what I mean?
Yeah.
So I'll kind of just keep that ticker on watch.
Yeah.
Yeah. So I'll keep that ticker on.
Okay. So kind of going to now earnings and cash on hand. I know you're a huge cash on hand guy. If they don't have cash on hand, it could mean an offering could be imminent. It also could mean that this company fucking blows. So what is it with you and cash on hand?
Yeah. So there's 2 ways to play this. You know, I'm totally inside the mindset of the traditional, like, hey, if the company doesn't have cash on hand, we're staying away. But there are times where we can use that to our advantage. For instance, if we know that a company doesn't have tons of cash on hand and the company has gotten smoked the past few months, you know, this is kind of like where that like everybody's playing checkers and like we're playing chess kind of comes into play here. Because if if it's one of those things where, let's just say, sorry, I lost my train of thought. Yeah. So this is one of those times where where everyone else is kind of playing checkers and we're looking to play chess. If the stock's been smoked, let's call it 60% inside the past 8 months. And and this company kind of comes out like, hey, we have a presentation in exactly 6 weeks, and you're like kind of looking at it like, okay, what the hell do these guys have going on? Sometimes the company will just put out fluff news and create a catalyst. They'll literally, like I said, create a catalyst to run the stock into that event to drop the offering. So again, we're playing chess. Everyone else is playing checkers. So if we know that, we can scout that meat of the move. So if it's one of those things where like the company literally the company's been killed, the company's been killed. They need they have to drop like a $50 million offering. And then all of a sudden they start to come out with like, we have a presentation in 6 weeks. Like we're really excited to show this off. Like we're going to announce something really great. And you're like, hang on a minute. Like what the fuck are these guys announcing? Like these guys don't have shit. So that's one of those times where, we can be a little slick. And while everyone's, kind of staying away, we can get in before the meat of the move and scalp that for the meat of the move, knowing that they're going to pump their stock into the beginning, into this presentation or whatever it is. And so that's one of those times where, the traditional mindset of cash on hand can work to our favor if it's lower. Obviously, though, for most swings that we're taking, we want high cash on hand. Like I don't want them to have to worry about cash for 2 years. At least most of the time, at least a year and a half, 2 years, because I don't want a company getting all slick if the stock's up, 100, 200% and drop an offering on my head the second that they get news. So, and part of that is knowing the management, which is not really fundamental or technical analysis. That's just like, you have to understand the management.
Just knowing if they did scummy things in the past,
Knowing if they did scummy things in the past is huge. The other thing that you can do is that go look at what the ownership is on FinViz or really any of the websites that you use. Go and see the ownership. If the company is worth $200 million and the ownership of the company, the executives only own 1%. I mean, that's really not that impressive. What is that, like 40 grand or something? Or no, 20 grand. That's really not that impressive. Or no, wait, that's
what was the
totally
number?
off.
Sorry, like I'll do the math for you, dude.
Like, what do you call it? Like, let's just say the company's
of
200
of 200 million.
Yeah, what is that?
So
200,000.
10% would be 20 million, and so 10% of that is 2 million.
Yeah. Okay. So of all the executives and everything, they only have 2 million into this thing. Now remember, they all get compensated. Wow, I was way off. They all get compensated from the company with stock options, and stuff like that. Like Elon Musk. Okay. Now I know that this is loaded, but Elon Musk and other companies, one of the things I like to see is that they take $1 as their salary. Okay. They take literally $1 because they need to take something, it's an innuendo, but so they only take $1 as their salary. That's the kind of shit that I love to see. High ownership. I mean, Elon Musk, up until like a few weeks ago, owned like 20% of Tesla. Like Tesla's like $1 trillion company, and he owned 20% of it. So you're telling me that some schmuck that has like a $50 million market cap can't own more than 2%? Get the fuck out of here. So
Elon Musk has got a little more money than most schmucks, however.
No, I totally agree. But the thing is that, like, I don't want to, like, if they have the choice between taking a bigger salary or stock comp, that's what I want to see. So that's my point, is that I want to see high ownership, and I don't want to see these big ass salaries. Like there was one company that I was looking at like maybe 2 or 3 weeks ago, and they had what was it? Oh, they had $8 million. That the CEO was making $8 million, and the market cap was like $100 million
cash.
What? Yeah, I'd be like, what the fuck is, like, sign me up, bro. Like, I'll go do that, So that's one of those times where it's like, okay, clearly this management does not care about their shareholders, stuff like that. So just to bring it back, look for a catalyst. We love catalysts with times. The issue with timed catalyst is that sometimes the companies can be slick with offerings. That's where the fundamental DD comes in. Stuff with high cash on hand. But the other part to that is the management side. high ownership, see what the comp is, see what they've done in the past. Okay, so we kind of connected those three parts. All right, did we miss anything of those three?
No, I think you killed it all in the perfect amount of time because I do have to leave shortly. However, do you want to tell?
You're going to Vegas, baby.
I am, and you should be. Do you want to tell the listeners why you can't?
I will not be in Vegas, homies. Your boy passed out for the first time the other day.
Yeah, the heart condition we always refer to. Just last episode we were saying we were just talking about it, and now here it comes. Yeah, here it comes. Something tilting its head. Right there's a word they use. So 1 like and 1 5-star review is a pray for Hugh. So make sure
I'll be okay. I slept tons last night.
Yeah, I think that's the issue. Is too much sleeping. And isn't that like the what it makes you do? It's like, oh, dude, I'm sleeping great now. It's like, yeah, that's the problem, man. That's what the heart issue is doing to you. Here, mister. I used to be a 3-sport athlete, but
you could probably say my story better than I can because
I got it. And then mine, it's like been arrested all these times, like easy peasy. We got it. But
we're like the odd couple,
Yeah. But no, obviously, I'm sure everyone listening hopes you feel better and really hate that you can't make it to Vegas. And if there's any way you can make it out a day or two late, for sure do it. And you're a hell of a trooper for recording the podcast a day after basically having a heart attack.
But
so
you put the carrot on a stick and started having me talk about DD,
I told him we could have a DD episode and he suddenly felt better. So we'll see you guys next week, and I hope everyone has a fantastic weekend.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.